Welcome back to another stock analysis, where I look at some key metrics to calculate the fair value and my buy price for the stock. Today I'm going to analyze Novo Nordisk, which is one of the biggest companies in the healthcare sector. Last, they generated a revenue of 141 billion Danish crowns, and they have a market capitalization of 1.35 trillion Danish crowns. The revenue of Novo Nordisk can be divided into three segments, which are diabetes care with 80%, biopharma with 14%, and obesity care with 6%. The revenue can also be divided geographically. It is informed that 48% of the revenue is made in North America, 27% is collectively made in Europe, Middle East and Africa, 11% is made in the China region, and the last 14% is made in the rest of the world. If you want to know more about the revenue, you can check out the annual report of Novo Nordisk, which I've linked down below. Enough about the introduction, let's find out if Novo Nordisk is a good stock to buy at its current value. The key matrix I use to calculate the fair value and buy price for Novo Nordisk is the dividend yield. I'll start with plotting the dividend yield for the last few years in a historical chart. I choose the dividend yield because a consistent dividend policy for me is the best indicator for a stable company. Additionally, a steady dividend payout helps to stabilize my portfolio and it makes it easier to rebalance my positions. To create some sort of signal line, I take the 5 years moving average of the dividend yield and plot it in the chart. The simple approach is now that the stock seems overvalued when it's under the moving average and undervalued when it's over it. The average of the last 5 years is 2.08%, and I would like to define this as the historical dividend yield. Since the historical yield is the fundament for my fair value and buy price calculation, this value shouldn't be too volatile. In an ideal case, the curve will give a straight line. I can measure how much the curve deviates from this ideal straight line by calculating the relative standard deviation, which for Novo Nordisk is 15%. To the historical yield, I had a personally defined margin of safety of 25%. This margin of safety will be adjusted upwards or downwards depending on the matrix of the company. My first criteria is the stability of the dividend measured with the relative standard deviation. With this value I can measure how volatile the dividend yield is. A high relative standard deviation would higher my risk to invest at a bad timing. As said earlier, the relative standard deviation for Novo Nordisk is 15%. This value is inside the yellow section of a rating scale, and therefore the margin of safety doesn't change. As a dividend investor, the dividend growth of course is a very important matrix for me. In 2007, 0.7 crowns were paid, and in 2022, 11.6 crowns is expected. Novo Nordisk has paid and increased the dividend for 20 consecutive years, which makes them a dividend contender. In the last 5 years, the average dividend growth was 8.8%. A dividend growth of 8.8% is a solid value, and in the light green section of a rating scale. Therefore, I subtract 5% from the margin of safety. By looking at the payout ratio, I'll find out if this dividend growth is sustainable for the company. I always look at the payout ratio in respect to the free cash flow, which is the cash flow the company has available after they've paid all necessary expenses. The free cash flow for Novo Nordisk has increased from 45 billion crowns in 2018 to 55 billion crowns in 2021. The cash dividend were respectively $20 billion and $24 billion. The average payout ratio thereby becomes 42%. This value is in the yellow section of a rating scale, and therefore the margin of safety doesn't change. Next, I'll take a look at the debt situation. The company has a debt of 9.2 billion crowns and have 10.7 billion crowns in cash. When the cash gets subtracted from the debt, and this value then gets divided by the EBITDA, the debt to equity ratio is found. The EBITDA is currently at 65 billion crowns. Since the company has more available cash than debt, the debt to equity ratio becomes zero automatically. The debt can't be negative, therefore the numerator becomes 0, and the fraction becomes 0 if the numerator is 0. Enough about mathematics. The debt to equity ratio tells us that the company could pay off the whole debt at any time if they wanted to. This is of course a very good value, and for this matrix I subtract 5% from the margin of safety. For the business to be sustainable, growth is a very important factor. The revenue has increased from 112 billion crowns in 2017 to 141 billion crowns in 2021. This gives an average growth of 6%. In the same period of time, the EBIT increased from 49 billion crowns to 59 billion crowns, which gives an average growth of 4.6%. The margin is found by dividing the EBIT with the revenue, which in 2017 gives 43.8% and in 2021 decreased to 41.7%. Since the revenue increases at a higher rate than the EBIT, it only makes sense that the profitability of the company decreases. In this case, it decreases with 1.3%. An EBIT growth of 4.6% is in the yellow section of the rating scale, which gives no further adjustment. But I'll add 10% to the margin of safety for an average margin decreasement of 1.3%. The last thing I'm looking at is the potential yield on cost. This matrix tells how great a potential investment in Novo Nordisk would be and what annual income I could expect in a few years. Novo Nordisk has a dividend yield of 1.48% and a dividend growth rate of 8.8%. I assume that the dividend gets fully reinvested at the same conditions, but I subtract 27% from every dividend payment because of the taxes I have to pay in Denmark. After 5 years, the yield on cost is 2.4%. After 10 years, it is 4.2%, and after 15 years, it is 7.5%. I only calculate the potential yield on cost for the coming 15 years because of the natural uncertainties of this matrix. A yield on cost of 7.5% after 15 years isn't that great, and in the red section of a rating scale. Therefore, I'll add 5% to the margin of safety. Since every matrix for my analysis has now been collected, it is time to adjust the margin of safety. We'll start with minus 5% for the dividend growth, minus 5% for the debt, plus 10% for the margin growth, and plus 5% for the potential yield on cost. The new margin of safety thereby becomes 30%. This leads to a desired dividend yield of 2.7%. By a current dividend of 11.6 crowns, I should therefore don't pay more than 430 crowns for the stock. By ignoring the margin of safety, the fair price of the stock is determined, which for Novo Nordisk is 558 crowns. These values can also be shown graphically in the chart for the historical dividend yield. This is done by adding the margin of safety to the historical yield curve. This then gives a new curve which always lies 30% over the historical yield. As seen in the graph, the historical yield and the margin of safety are over the yield curve. Therefore, I consider the stock as overvalued. Finally, I consider the stock at its fair value when the price is 558 crowns. I would buy the stock at 430 crowns, and the stock price is currently at 788 crowns. If you did like the stock analysis, please consider to give the video a like, let me know in the comments which stock you would like to see next, and subscribe to my channel for more content.